Welcome. Today we're going to talk about why you should not buy a pre-construction condo in the GTA in the early part of 2024. We're going to talk about, when I get into the data here, what it costs to actually build a condo in the GTA, what the average sale prices are, what the average resale market prices are, and why buying pre-construction right now is potentially a losing proposition or investment for you. Okay, and if you really must buy a pre-construction condo this year, I'm going to share with you the 3 criteria that must absolutely be present for it to be a sound investment, whether you're living there or it's a real estate investment for you. Plus, and a very important bonus you don't want to miss, so stay tuned until the end. If you take value from this, please share, subscribe, and do a friend a favor and share with them too. Let's jump right into it. What you see here on the screen is the cost to actually build a pre-construction tower in the GTA, actually broken down for you from April 2022. Now, these have changed slightly, but for the purposes of our conversation, it is as accurate as it needs to be. A good friend of mine, Costas, put this together, so I want to give him credit. Now, the land value, this is very important, ranges between 10 and 30%. Why is there a range? Because developers a lot of times accumulate property over a period of time. So even if you see a new condo being built, the developer or the owner may have had that property for 5, 10, 15, could be 20 years or more. We don't know when they actually accumulated. What matters is when they actually decided to buy. So they may have accumulated at a much better price in the past. That's why there's a variable here. Construction costs definitely have a variance depending on the quality and the type of finishes that are being offered. So that ranges between 30 and 40%. Soft costs can range quite a bit too. Those are planning fees, planning costs, engineering, drawings, any kind of soft consultative type of cost is going to be here in the soft costs, okay? Government charges, that is a huge chunk, okay? We're not going to get into that today, and they're broken down for you here if you want to check it all out. We're not getting into it. Just know that it is a cost. They keep going up, and it's not the developer's fault. What I want you to pay attention to is the actual profit margin right up here, okay? The profit margin ranges between 7 and 13%. Again, it varies, but I know for a fact that this profit margin is very steady. Okay, across the GTA, it is very steady. I know I'm a developer myself. I don't build huge towers. I'm small to medium size, but I know this profit margin is steady. Let's check out some actual projects that are available and get into the details here. We're going to take a look at this map, and I'm going to show you some actual pre-construction listings and how they compare to the resale prices to show you what's more expensive and which is not. But before we get into it, what in the hell is happening with pre-construction in the GTA? Check this out. You got Toronto developers delay launch of about 14,000 new condos as sales dive. New federal tax measures clamp down on Airbnb, VRBO hosts with new tax measures. Okay, and you got Toronto developers offering condo purchases up to 92,000 in cashback incentives. Why am I showing you this? Because the Toronto GTA condo market is suffering as a whole. There are some pockets that are doing well, and some projects are doing well, but as a whole, it's suffering because interest rates have come up. Interest rates have come up and made purchasing much more difficult. It's made speculation from investors much more difficult. On top of that, the federal government has come out and is clamping down, trying to catch every little bit of tax it can from every little speculator and every little investor, turning away a huge chunk of the buying market. So developers are not canceling projects, but delaying them. That's why you see 14,000 new condo units being delayed. It's probably more, way more, but they're being delayed because the developers are waiting for more juice in order to sell their units. They want to wait till the market is going to provide the profit they need. Remember, they need to hit this margin. If they cannot hit that margin, if their margin is, say, right in the middle at 10%, and the market drops by 5 or 6%, do you really think the developer is going to build that for 3 to 4% margin? Not a chance. Not a chance. Okay, so let's dive in here. I'm going to show you. I just picked these for fun, like these specific condo units. There's nothing special, good or bad about them. I'm just using them as an example. This is 8 Elm Street, downtown Toronto. That's the Yonge and Elm area. Occupancy 2027. You have 1-bedroom units starting at $710,000. Now, if I were to take $710,000, and let me bring up my calculator here. I hope you can see it, but I will tell you the math I'm doing. I'm taking 710,000 in my calculator, and I'm dividing that by $1,865 per square foot. 1865. That's giving me a starting square footage of around 380 to 400 square feet. So that is a very, very, very small unit that you're getting for $711,000. Let's jump over to the map and let's check out this specific area, which is right here. So check out this top corner right here, and then the one bedroom average pricing. So in the Bay Street corridor and the Yonge and Church corridor, this is the general area of that Elm Street condo. You have one bedroom condos, an average resale price, all condos, $658,000. And in the Yonge Church corridor, $612,000. I'm going to be generous and say an average of $650,000 for resale. But friends, this is starting at $710,000 for 400 square feet. So if I was advising you out there and you really wanted to be in a condo in downtown Toronto because you have a great job and your things are working out for you, or you want a one bedroom investment that you're going to save it for your kids, whatever the reason may be, and you were looking at this as your advisor, I would say, friends, let's take a look at this numbers to numbers. Why buy this when you can go out on the resale market and get something that's probably bigger, that's vacant, for less money? Okay, this is another reason why things are not selling. Let's take a look at another example. This is Craft Residences in Dundas Street West. This is about the Junction type of area. Again, I got no affiliation to this condo. I just picked two random examples for fun. One downtown and one in another area. So one bedrooms starting, closing 2026 or occupancy 26. One bedrooms starting at $755 essentially, at $1,500 a square foot. So I'm bringing out my trusty calculator. I'm taking 755,000 and I'm dividing that by 1,503 square feet. And I can see that the units are going to average or start around the 500 square foot mark here, but for a little bit less price. Now let's check the average sale price. Again, take a look at this top right corner here and the one bedroom pricing. So we're right here in the Dovercourt, Wallace, Emerson Junction area. So you have one bedrooms at the average condo selling at $540,000. So again, there's a dramatic example, a dramatic difference between the price of the resale condo and the price of the pre-construction condo. That is a huge, huge difference. So as a buyer, as a critical thinking buyer, you have to analyze the situation and say, where am I going to get the best bang for my buck? And if I'm an investor and I want to make money, does it make sense to pay that crazy price just to delay my closing by 3 years and pay that much more when I can go on the resale market and start collecting some cash flow maybe, or at least getting some mortgage pay down and appreciation, and now at these depressed prices? So that's crazy. And it's just not just happening here, it's happening in Vancouver also. This is a condo in Vancouver, and Oak Ridge Center Redevelopment offering a car for a condo. So they teamed up with a car sales company, and they're if you buy the condo, they're giving you like a lease or a huge reduction on a brand new car. They're trying to say, buy a condo, you get a free car. I mean, it's nuts out there. So that's why you see everyone's delaying, everyone's trying to postpone, and those that need to sell, just because they're in a place where they need to sell units in order to keep the business moving. Because if they could delay, they very likely would. So to finish this off, if you absolutely must buy a pre-construction condo, or you decide it's the right path for you in 2024 in the GTA, these are three things that must be present in order for it to be a sound investment and to ensure that you're not making a bad decision that will cost you a ton of money, okay? Number one, make sure there are no silly giveaways with the condo sales. I know it can be enticing to say, here's a free car, but I promise you, you're paying for it in the price of the unit. If the price of the unit is $700,000 and you're getting a $40,000 car, well, that price of the car is included in the unit, because the developer's margin cannot dip below this. They're not going to build this building for free or lose money. It's just not going to happen. Okay, it's not going to happen. They will delay if they can. So remember, they're enticing sales. So if there's, if the unit's for sale for 600,000, they're trying to give you a $40,000 car. Say, hey, I'll buy this unit for 560,000, please. Try that. Number two, closing at least 3 years out. So we're in 3 years out. We're in 2024. This is March 2024. I would, if I must buy a pre-construction condo, I would make sure the occupancy is at least March 2027 or ideally longer, because I want to have a buffer time so that when I'm ready to actually close and take a mortgage on this unit, that interest rates have come down, to make my qualification easier, or if it's an investment, make my investment actually worthy of being an investment. I want my income to cover as much as my expenses as possible, and ideally cash flow. What I would not do is get sucked into something that's closing like in 6 months or 12 months, and then I'm very likely going to overpay for it. It's not worth it. Just wait it out. Number three, if you must buy a pre-construction condo and you want to close soon, there is an opportunity. There are many people who have bought pre-construction condos in the last 0 to 3 years who are closing soon, who do not want to close because interest rates have come down, values have come down, the cost to close has become high. Maybe they're taking private mortgages to close. They want to get out. They want to assign their contract. They want to sell their contract before closing. So if there's an opportunity for you, if you're willing to hustle and if you know the right people, to get in and buy some of these assignment units for less than market value, or at least less than what they paid. So if you can get into an assignment unit at 10%, 10 to 15% less than what the original buyer paid, that's a win on paper. That's a win on paper. That's going to protect your profit margin in the future. And even if you're moving into it, it's going to give you a buffer so that when the market kind of corrects itself and starts to turn forward again, that you have a buffer of equity built in there and you can sustain yourself. It's a very smart move. If you have to do it, grab an assignment 10 to 15% under market value. Okay, here's the big bonus. If you must do the pre-construction purchase this year, your contract must have a flexible assignment clause, not a restrictive one. The more restrictive your assignment clause is, the more pain you're going to suffer if you have to get out of the deal before closing. Okay? And if you're trying to assign the unit before closing anyway for a quick profit, that's obviously not going to help you if it's a restrictive. So you want a nice flexible, okay, assignment clause in there, one that allows you to do as many things as possible. I know they don't let you put on MLS, but there's a lot of restrictions that I've seen in assignment deals, only being able to sell it within a short window and then not being able to sell it after occupancy and all kinds of crazy stuff. So if I'm going to do that and I'm going to bet on this deal, I'm going to bet on this developer, I'm going to take a chance and close 3 years out, I want an assignment clause on paper that benefits me, not that benefits a developer. If you follow these three things and the bonus, you will protect yourself. And if you're looking for investments and you've considered pre-construction, please talk to me because we can figure out a better way to do it. Check the description. There's a link in here. Download my book. I talk about everything that's going on in the market right now in 2024, 2025. Read it, digest it. I think you're going to like it. If you need an appointment, book one now.